Daryl King, sharing in the mindsets. Now, I have my very special friend, Vince Agozzino.
Wow, well done, Daryl.
Yes. So he's a good personal friend, but a business partner also. So Vince has been doing this for over 25 years, including a long and successful career at Mortgage Executive, where he has worked with some of the country's major financial institutions. Vince also has served on the board of directors for Mortgage Professionals Canada, keeping him on the leading edge of the Canada mortgage industry. Vince has a very deep understanding of the Canadian mortgage market, and he will certainly leverage his vast knowledge and experience to provide valuable and unique mortgage strategies and solutions to both Capital 360 Mortgage Team and its customers, which is more important, and we would be his customers. So let's give him a big hand. I want to thank you for buying this nice, very gracious lunch. Joe from Santina, congratulations, supplying beautiful. The penny was like, oh. So I've known them for 30 years.
You know, Daryl, with an Italian background, I figured we better have an Italian lunch, right? So we'll set off on the right foot.
Right? So, not to waste any further time, let's get right into this. Yep. So, you know, you having rising, so the market just stayed the same today, which I predicted it would, right?
Yes, you did.
So it stayed at 2.25. So what do you think that is? I think it's good because it's stabilization. There was fear it might go up. So now it's 4 times in a row that it sat there. So it's showing that they don't want to move. They want to keep the economy moving. So what is your quick thought on that?
Yeah, I say hip hip hooray. So 4 times in a row, 2.25. The Feds did not move, did not change, which, you know, it was the worst, best kept secret because every economist in the country said the same thing. What it affords us is confidence and stability, and that is what the Canadian consumer and market needs now more than ever. So I couldn't be happier that the Feds have maintained the 2.25 rate. We foresee that happening for the remainder of the year, quite frankly. We can get into more nitty-gritty after, Daryl, but it's huge for us as an industry. Lord knows we've been through some very, very tough times. For lack of a better word, 2025 was an abortion. I hate to say it. It was terrible. It was terrible for all of us in the real estate market, in the mortgage industry, just downright brutal. And if you were able to sustain above water in 2025, well, I say congratulations to you, because most did not. We know the numbers. We know how many realtors are in Ontario. We know who does a deal. We know who doesn't do a deal. And it's just a tough time. But that is behind us. And we do see in the finance world a light at the end of the tunnel. It might be 2, 3, 4 years. Not that this year will not be a bad year, but you know, it's going to get better. It's not going to get worse. And we're going to get into some numbers as we talk further, Daryl. But could not be happier with the stability and confidence that today's Feds gave us today. For those that do not know, Governor Macklem today also had a monetary discussion at 10:30, where the economists will dissect every line and word that this gentleman says. And at 10:30, I got to listen to it just a wee bit because I was on another presentation and at what time was that? At 10 a.m. this morning. But I'm looking forward to hearing it. But it's good times ahead, Daryl.
Well, it's good you say it's good times ahead, but here's what I have to tell everybody. We're in very, very challenging time. You know, I would say it's the worst real estate in 50 years. Yeah. And, you know, but you have to be positive on what you can stay positive about, because there's a lot of people underwater. And, you know, I know that a lot of the banks and financial things have given them, you know, longer term mortgages to help them bail them out and stuff like that. So anything that's positive and inspiring, by having the market stable for 4 times in a row, is the Bank of Canada is showing us that, you know, they're going to do their best to keep the confidence and keep the economy moving forward. We can't control outside sources, but we can control what we do here in Canada. So that's what we have to focus on. It's so important, right? So with everything happening in today's market, is it actually harder to buy a home right now, or is it just misunderstood?
No, I believe it's completely misunderstood. It's not that it's more difficult. I can tell you that in Q1 of this year, Capital 360 Mortgages has entertained more first-time home buyer pre-approvals than we did all of last year.
In the first quarter alone.
In the first quarter alone of this year. So what that tells me is that stability, confidence. As long as you've got a job, we're okay. And why are these young kids and first-time buyers coming back into the market? Stability. Rates have gone down from the COVID of 6%. Now we're at, 4, low 4s, whatnot. And they see stability and they see rates where they are. I mean, I say it's not easier, but more attainable because, prices have dropped 15, 20%. So, it's on sale right now. So, just like the stock market, when it crashes, the folks with cojones, as we say, or have guts, will run to the market and buy more because it's on sale. But you gotta have the faith that it's gonna come back, okay? And no different than the market that we are entertaining right now. Will it drop another 4 points at the end of this year? Maybe, it's possible. But at 4 points, what's the big deal? To me, if you're trying to time a market, which I think is actually next to impossible because it's not gonna happen, I really think this is your best chance of timing a market because it's going to come back. Trust me, in 2 or 3 years, it's going to come back. I had not first-time buyer, young kids, 30 years old, they weren't first-time buyers last week. They had a situation whereby which they had a great deal on a home, but they just couldn't afford it, the Schedule A banks. At Capital 360 Mortgages, we have over 120 lenders that we deal with. A deals, so I deal with Scotiabank, I deal with BMO, TD, and a myriad of other A lenders that you may not be aware of, that offered special products, special things that the banks simply don't do. Now this young couple did not qualify the bank, but I did qualify them on a B lender, okay? Where they allow, if anyone is familiar with GDS, TDS ratios, it's called gross debt service and total debt service. At banks, that number can't exceed 39.44. These kids are at 50.55, right? So that being said, we stretched the amortization to 40 years. They just made it under the 55-year mark, but this is the house that they wanted, and they wanted it now to grow a family. And so what this afforded them was the fact to get into the market today and not wait 3 to 5 years when that house is going to be worth more. So this house in the market, comparables were selling at $1,020,000, $1,030,000. They bought it at $950,000. Why? Distressed seller. So they had to get it. So on the B side alternative, there is a 1% lender fee that they have to pay. And lo and behold, of course, this lovely lady says, why do I want to pay this 1%? It's $6,000 and blah, 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 blah. And I said to her, let's pretend her name is Susie. I said, Susie, yes, it's going to cost you, lender, of $6,000, which we're going to add to the mortgage, but you weren't going to get qualified at the A banks. So you were going to get a decline. I got you an approval. And I said, can we remember one thing? You bought this house for $950,000. You made $70,000 last night, if you ask me. Because in 2 or 3 years, it'll be $1,020,000, it'll be $1,030,000. And then you're gonna be a happy camper. So don't worry about the $6,000. And once I explain in that facet, they forget what they just made. I said, remember, if we think long term, you bought for $950,000. Down the street last week sold for $1,020,000. You just made $70,000. And you think it's gonna go down to $500,000? No. But I will tell you, in years 2, 3, and 4, that house will come back to $1,020,000, if not more. So now you've just realized that game. So there are options. So about misunderstanding all day long. People will ask me, Vinny, they'll say, Vinny, why do I use a mortgage broker? And you can use any mortgage professional. Lord knows I have a wonderful amount of colleagues throughout the province. But why would you go to a Schedule A bank when they only offer you their envelope of products? That's it. That's all. One choice. So God bless my friends at TD, RBC, CIBC, who I deal with, outside of RBC. When you can deal with a mortgage broker that offers those same products plus 100 other options with one credit bureau pull. So everyone's worried about pulling my credit bureau. Pulling my credit bureau, is it going to affect my credit? Well, first of all, it's not going to affect it as much as people think it's going to affect it. There's 5 C's of credit. There's 5 determining factors that will deteriorate an Equifax beacon score. And if you just pull one, and I get to shop 120 with one credit bureau, is that not better? Does that not make choice? And if we qualify on the A side, there's no fees. I don't charge the fee on the A side if they qualify because the banks pay me. I make it very clear in my disclosure statements. So no different than when you're getting your car insurance, you go to an insurance agent. That insurance agent will shop 7, 8 different insurance policies. Canada Life, Manulife, whatever. Because he gets the best, or she gets the best policy. We do the exact same thing. So why not give yourself the best option? I don't want to deal with anybody that doesn't want to deal with me, but get your clients pre-approved. Do not drive around and waste time. If you do, you're silly. You say, hey, you know what? I love you, Tommy and Susie. Go meet my good friend, Mr. Agozzino, who deals and I partner with all the time. Let's see what the hell you can buy. So we're not looking for a $2 million home when you only get approved for $1 million. Why are you wasting my time? Quite frankly, I'm talking greedy for you guys. Don't waste my time, right? And then I will call the lovely realtor up and say, hey, don't go over 1.2 million because it ain't gonna happen. Simple as that. Thank you. Now you know what you're doing. No different if I'm gonna go buy a suit. What's my budget? I look over to my wife. What can I spend this month? She tells me, okay, now I know my budget. Simple as that. Can't spend more than 50 bucks. Anyway, no. So you need a budget. And if you're not getting a budget, you're doing a disservice to yourself and more importantly to your client. The market's misunderstood. There are options. Sorry to circle back. There are options, plentyfold. Make sure you partner with the right mortgage professional to get those options for you.
As I always tell everybody, picking the right agent is a decision that you have. It's your choice. You pick the wrong agent, you may not sell your house. You pick the right agent, they will make sure that you're positioned correctly. So it's the same thing, guys. You should not be working with any first-time home buyers unless they've been 100% pre-qualified before you take them out, because you're wasting your time, you're wasting their time, and it's just going to be fruitless. So as the GST and HST, the government has done something here. I wish they would expand it a little more, but for now, so what's been happening out in Oakville last week, the project out there sold out. Ottawa, sold out. A couple places in Markham, sold out. So what's happened is a lot of these places were sitting for months and months and months. So now they can get up to $130,000 rebates, plus there's other things that you can work with. So if you notice, if they were there 3 months ago, they're probably not there today. So if you sit on the fence too long, the market goes up 1 or 2%, you're already behind that 8 ball. So I'm not saying the market is going to take off like this because I don't believe that. But I do believe that we're getting close to bottom and the rates are pretty much holding. I mean,
Yep.
I was afraid that, they might just be foolish and raise them, and whatever's happened so far would put a big... Because it's that confidence that means everything. Mm-hmm. You know what you can get it, so go lock in. What's the longest term you can lock in? 90 days, 120 days?
Oh, lock a rate 120. Actually, our good friends at BMO go to 130, so...
So between 120, maybe you stretch to 130. So get that locked in right away because it's important. So for all you buyers out there, go get the proper mortgage people, get locked in, and then call the Daryl King team.
On another point, guys, I'd love to help you move more units because if they've gone to the branch and they say, oh, I only got approved for 700, but they need more, you say, well, you know what, can you go speak to my friend Vince? Because I'll give them a B alternative. So if they really love that house, I say, I can get you to 9. And now you're going to sell a higher purchase price home. You're going to make a little bit more commish, is what it is. But we're doing the right thing for the client if that's what they truly want. And if they truly want to get that house and get in that market, they don't have to wait. There are options that you need to be wary of, and you need to partner with the proper professional to give them that option. So, in a pre-approval process, I'll say to the pre-approval process, hey, on the A side, you're good to 700, but you know what? If there's something else, might go to 950, but on a B product. And folks, when we talk a B product, alternative lending, my great friends at Home Trust, the EQ Bank, Equitable Bank, and a myriad of others, you're only paying 1 point higher interest rate a year. Like, it's not a big deal. So if the rate's going to be 4.2%, I might get 4.99, 5.15 on the B side. So it's not like we're paying 9%. It's a wee bit more, but getting what they want. Right?
You get a lot more from 700 to 900.
Exactly.
Like it's
right?
night and day.
And that goes for the same point as fact of different life cycles. So if you've got self-employed, I love my self-employed clients. We're all T4A people here, but I'm all self-employed clients. So, Tom is a mechanic and has got a great accountant, and the accountant says, hey, Tom, for tax purposes, we're only going to declare $36,000 for notice of assessment. Now, poor Tommy wants to buy a home for $1.3 million, and he needs an $800,000 mortgage. $36,000 in NOA ain't going to qualify a service an $800,000 mortgage. Not going to happen. But what we do on the B side, and this is all legit, so it's on the up, is the bank, the B lenders say, hey, if I talk to Tommy and I say, Tom, your NOA says $36,000, but you're a mechanic. What do you really take home? I have a face-to-face conversation. Tom, what do you take home? What do you take home, buddy? So, you know, Vinny, I do about 125, 150, really. 175, maybe I do. I says, beautiful. You know what I need? I need 12-month business bank statements of Tommy's mechanic shop. If it shows the deposits that equate to 150 or 175, whatever you said, that's what I use to qualify, not the 36. But I'm going to tell Tommy that your rate ain't going to be the A rate because you don't declare your income. And you can't have your cake and eat it too. So that being said, it's up to you, Tommy. We can qualify on the A side. Go back to your accountant, tell him to increase your NOA to 200 grand, pay the income taxes on it, knock yourself out, there goes half, or pay 12 grand more a year in interest and get the house you want. What do you want to pay? 50 grand in income tax or 12 grand more in interest income? The answer is real simple, and they're like, "Oh wow, that's it." Yeah, Tom. So your payment was $3,700. Now it's going to be $4,000. Wife is happy, or your husband's happy, and you got the house you want.
Kids are happy.
Done. Right? There are options. There are options. A lot of options. Okay.
So that's, you know, with deposits, because you still need for a deposit, right? And everybody says they don't have deposit. So I had someone that wanted to do an offer on Timberline, and they didn't have any money till the following week. Well, we already sold it to 2 other buyers, and we sold it for full price. So people sitting on the sidelines, because we had people, oh, we're going to wait till it goes down. We're going to wait till it goes down. Meanwhile, it sold for full price, right? So, and we had other offers coming in, and it didn't, on offer date, it didn't sell. 3 or 4 days later, it sold full price. When it was sold conditional, within less than 6 hours, it got bumped out with another offer, right?
Wow.
So they had 2 offers, then we had other ones pouring in. So, you know, if you're sitting on the sideline, guys, you see a good house, that's why you need to be pre-approved beforehand, and make sure you've got your deposit money, because this is the biggest thing. So can you explain purchasing with little money down or no money?
Yeah.
What is that whole thing about?
So,
what's the biggest amount that they can get financing for? What's the least amount they can get deposit for? And I know there's going to be different rules, depends on your T4 and everything else like that, right? Where you're independent, what you can show on paper. So tell us a couple different ways that as realtors, if we're working with these first-time buyers, how we can reach out to you and give them the proper advice here.
love it. So first of all, to answer that question, let's talk 2 different clients. An A client that deals with a Schedule A bank, and a B client, the alternative I spoke about before. The B side guys and gals, they need 20% down payment. No ifs, ands, or buts about it. Done.
Everybody write that down.
They don't have,
20%
for the B side, for the alternative, they need a 20% down payment. No questions, don't even bother. That's what it is.
So where can those funds come from?
So, savings, borrowed if they want, but they want to see them in the bank for at least 90 days. Okay? So we have to show history of the down payment. So in actual fact, these guys got money, or, you know, sell another home, bring it over, you see a trust ledger account. That's the B side, okay? And the reason why they need 20% on the B side is because normally you're dealing with a riskier client. So we're mitigating the risk. In order to mitigate the risk and do a riskier deal, they want to see more money into the game. That's it. On the A side, fully qualified clients, okay? Teacher, fireman, fully qualified, accountant, whatever. Everyone is aware that they need 5% down for first-time home, minimum payment 5% down, correct? Do you guys know that you can buy a home with 0% down payment?
Well, that's why I was asking you.
That's why I'm telling you. So, not many people know that in this country, you can purchase a home fully qualified with 0% down. What that means is it's not really 0% down. What that means is it's the 5% can come from a non-traditional down payment source, meaning a line of credit, a loan, a gift from a parent. So really the purchaser has put 0 down. But if they've got a loan or a line of credit for $50,000, we'll take that $50,000, which is borrowed, we will include that into the ratios to make sure they qualify, or they can get a gift, a member, it could be from a non-family member or whatnot, and they can put that money down to purchase the home. Now, is this going to be all your clients? No. Is it a great catch and grab? Yes. But the option is there. So the reality is we've probably seen about 67% of first-time home buyers in this country. 67% of first-time home buyers are using the bank of mom and dad. You have to.
67 guys. Daryl King, 67. Last year with Leafs won the Stanley Cup. 67% of buyers.
That's why you're wearing blue. Right.
67% of the buyers are getting help from the parents.
Yeah.
Right? But not everybody has parents that can help them.
No.
So remember, it has to be 90 days somewhere outside. So if you're going to work with a first-time home buyer, so I'm just talking to Mary and Joe,
Yep.
and we're going to start today. Well, do you have your deposit thing straightened out? Have you got your mortgage pre-approval? Well, we never talked to the bank. We never talked to a mortgage broker. How much deposit do we need?
Yeah.
So that's why right away you got to have a partner like Vince that you can reach out to them. I don't try and get tied up into the money thing, but I need to make sure that they're qualified, that they can, if they go see a house, so we have one right now that we showing. I sold their house for full price, $2 million, but it's just conditional on a couple things. And what happens is, I told them to put an offer in conditional. So right now, 3 other offers popped in because it's so priced so well, right? So, you know, they're splitting up like the mother and son. So
Yep.
he has less income than he did before. So he's got to get pre-approved before we're trying to find that out. So it's so important. Otherwise, he could have put that offer in. He could have bought that place, and he'll sell it to someone else today, unfortunately. But it's so important, guys, that you qualify, and get in writing. So what I'm going to start doing, and this is how we used to do it back in when things were tougher. If you're coming in here and saying, no, I'm going to, you know, condition on financing, and they're already pre-approved, I'm going to ask for their pre-approval financing from the bank or the mortgage broker.
Bravo.
Because I'm not taking any more deals, and then comes 5 days, and then 2 other weekend days, 7 days. I've had the house off the market.
Yep.
Oh, we can't get financing.
I can't believe everyone doesn't do that. Like, if I'm a realtor, that's all I'm doing all day long.
So we're going to go back to that.
What do I know if I'm doing if I don't have the money behind me, man? Like, what am I doing? If I don't go buy a Porsche and I don't have the money, why am I going to look at a Porsche place, right? So, getting back to parents, you know, it's called generational wealth. You know, we're coming up to the most transitional generational wealth, probably close to $1 trillion in Canada, that's going to be brought from one generation to another. Like, this stuff is happening now, and we did a presentation here before a few months back regarding the reverse mortgage. I love the reverse mortgage. I think it's an early inheritance. I think if you've got $2 million in a home, a free and clear home, use that money. What are you doing sitting there free and clear? But you know, baby boomers are such that they're risk adverse. We've been taught differently. Save, no mortgage, blah, 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 blah. But you know, the Gen Z and Gen X's, the millennials, they're okay. They want to live. They're okay with technology. They want to do stuff like that. So, you know, I'm having a lot of conversations with my 50-year-old plus clients saying, well, you know, when this is happening, you know, your parents have a $4 million home. Yeah, I know, but when they die, well, it's 30 years from now. Don't they want to see? Don't they want to see you enjoy your money now? Like,
Get you out of the house?
not all, maybe not all of them, mine included. No kidding. So, you know, we have to like. It's just education. The reverse mortgage was ugly 40 years ago. It's been around for 40 years, quite frankly. It was an ugly product. It's much better now. Over the last 4 or 5 years, we've got about 6 players in the Canadian market right now. You know, a reverse mortgage right now, can anybody want to shoot out a guess what the interest rate is on a reverse mortgage today?
695.
695. 1 year term is 499 on a reverse mortgage. Reverse mortgage works exactly like, it's a whole different process, works exactly like a regular mortgage, but the payments come up at the end, and there's no monthly payments, and they just pay that after. But remember, you're earning equity every year in your house too. So it's about lack of education, why I believe reverse mortgages are not as hot as they are. I love them. And you know, we're 55-year-old plus, half our population is 50 years old. Like, where are we going? You have to be a chameleon. You have to adapt. You have to find new policies, new ways. If you're a realtor that was always dealing in pre-construction, where's our pre-construction now? Gone. So if you think you're still doing it, you're lost. Change your way. Find a different strategy. You know, as a mortgage finance guy, I had a great mentor once that said to me, you know, and I was a lender for 25 plus years on the corporate side, and we would change rules, it would be more difficult, and I went to one of my biggest supporters, and I said, his name was Peter, I said, Pete, I go, doesn't this like kind of piss you off that this is becoming so difficult now? He says, Vinny, he goes, I love it. I go, why? Because when the government or the policies change, I need to sit back and find a new way how to make this work, or else the game is boring. Because and the best part about it is 90% of my competitors won't do it. So they're not gonna learn the new way. They're set in their own ways. I got an advantage. Because can you imagine if I came, and he's doing this now for 30 years, because can you imagine if I walked into this office for 30 years doing the same mortgage, the same way every time? I'd shoot myself. It'd be so boring. But when the Fed say, hey, we're doing this, okay, I relish it. Let's go. And that's a new game now. So you need to do the same thing. But we haven't broken construction on a new pre-con in GTA in Q1 this year. It's not happened. And don't look for it to happen soon. It will come back. You know, we're going to be short some homes, but it will come back.
Well, I'll tell you what, if you drive around right now, you'll see the cranes working again. If you drive in neighborhoods, you'll see where everything's sat for like ever. You'll see the cranes back out there working again. Because I told you that when the government did the GST, HST, one of the best things they ever did, they need to take it a couple levels more than that, but I'll tell you what, you'll get workers that have been sitting on the sidelines 6 to 8 months, they'll get back working. The builders and developers are going to have some of their inventory eaten up. Remember, there's 50,000 condos out there sitting there. So they'll start evaporating, and when that starts evaporating, prices won't be like this. So people have to be wary of that and watch what's going on. So the other thing that I want to ask you is, what are some common reasons banks are declining mortgages applications in today's environment? What are the big red lights that I always tell someone, don't go buy a car when you're going to go try and get a mortgage, right?
Is this a trick question? All right.
Well, no, I just,
Okay.
because there's different things that are red lights for, you know, where you're trying to get a mortgage.
Let's
So
go
what are
top
you-
3. Lack of income, poor credit, and job stability, right? If you're on probation. I mean, you need the money to qualify. It's really simple, right? So those are your 2 things. So the banks have those parameters on them. That's why you come to a broker that has different positions. So those are your top 3 things. You got to make sure they pay their bills, and that they are employed, that they do have income that they can prove and qualify, and then away you go. It's not rocket science. It's pretty darn easy. I mean, as a broker, when I get a deal that's a slam dunk, we're like, okay, what's going on here? Because, you know, people will always kind of think, but then they'll say, like, you know, why again are you going to the broker? 2 things. It's speed and professionalism. Simple as that. As far as trust goes, I say, hey, tell you what, go to the back of the branch. Have you spelled them? No. Tell them you're dealing with a mortgage broker, and you want the best 5-year rate, but you understand that I am working with a broker, so I want the best rate. Come back to me with that rate, I tell my client. Come back. Normally, I can't beat it. And if I can't beat it, I'm going to say, hey, Susie, go. That's an amazing rate. Go do it. And she'll be like, why? It's because I can't beat it, Susie. And what I want is what's best for you and your family. So that's what you need to do. I said, but if I can't beat it by 5 or 10 beeps, I don't want you to go back to the bank and give them a second chance to beat me. Because now you're wasting my time, quite frankly. And why would you give them a second chance when you told them up front what you're doing? So they held back on you? So why do you want to reward them? I said, my time is worth money, quite frankly. And they all say, Vinny, deal, done. And most times, 79% I lose the deals because the rates are better. They're very, very aggressive on renewals. But they'll always say to me, oh my God, Vince, you know, can I bring you a bottle of wine? Can I get you something? You got me a much better rate because you told me what to do. And I'm like, no, I don't need anything. I'm fine. Thank you very much. And, you know, I'll tell you straight up. And then I'll say to them, actually, you know what? You can do something for me. And they'll be like, what's that? I go, can you tell 5 people about me? And they'll tell 50. I will get paid 10 times over on that one good advice. I know I will.
So here's a question. So we talked about low credit score.
Yeah.
What's the best way to get your credit score fixed today?
Pay your bills all the time.
No, but
even minimum.
how long?
Yeah.
So let's say someone's down to low 500s or low 600s. Mm-hmm. And like I had someone tell me that I owed them thing. And it's somebody else. And the guy says, oh, we're going to put it on your credit score. I told him, well, I'll get a lawyer and you'll be freaking wishing you didn't.
Not you.
Well, it was only for $350.
Silly.
They've been bugging me for like so long, and it's not even us. It's another person on their phone from 2011. So
the quickest way, Daryl, is every creditor reports into Equifax and TransUnion, normally on a monthly basis. So they'll feed in the information, hey, Daryl's behind, Daryl missed a payment, Daryl's fantastic, we're up to date, Daryl's paid in full. So there's always that lag time. Sometimes it's 60 days. I've seen some as late as 90 days. So if you're going to rehabilitate a credit person, you need at least 3 to 6 months minimum to rehabilitate. Okay, to bring a 550 up to 650. But you know, one of the biggest draws on a credit bureau rate that brings it down is overutilization. So meaning, if you overutilize your credit facilities by 75% or greater, that weighs down your credit bureau. So you want to, if you have a $10,000 credit card, don't make your balance hover over $7,500 for months on end and make monthly payments. It's good, make the monthly payments. If that's all you can do, God bless. I know it's tough times to do it. But if you can get it under the 75% bracket, that is a great deterrent in making it better. So you've got 5 C's of credit. It's not just how many pulls. It's also utilization. You know, if you do go to like 15 different credit seekers, and because you're looking for credit, they're all saying no, that's when your credit score is going to go lower. But a lot of times, you know, at Capital 360, my tagline is, what's your mortgage strategy? It's not about the rate. I don't care about the rate, and I hate to say this. I do care about the rate, but I'm going to get you a very, very good rate. I know that. That's my job. It's a given. I'm going to get you a very, very good rate. Will someone always have a better rate? Absolutely. Somebody will. But be careful what you ask for, because it's not just about the rate. It's about the product. How about if you leave and you got that 199 rate, but because you got that rate, now if you move, it's going to be a $70,000 penalty because of the options that they don't have, right? So it's all about the mortgage strategy. So I will sit and have a conversation with my clients. What's going on? Are you here for a while? Are you having a family? Are you going to move to the U.S.? You want to buy an investment property in 3 years? You're looking for a cottage? What do you want to do? So I tell my clients, where do you see yourself in 10 years? That's what I say to every one of my clients. Where? And they're like, what the hell is this, a psychiatrist? I said, no, because I need to know what your plan is. Because if I don't know, then I don't know what's the proper product for you. You think they're asking that at the banks? Never are they going to ask, where are you in 10 years? And I hope I'm not giving away too many secrets. But that's what I do.
Most people don't know where they're going to be tomorrow, never mind 10 years.
Bravo.
Right?
Yes.
So getting their credit score up to date is probably one of the most important things you can do.
Make your minimum monthly payments. Never, never, ever, ever, ever miss. I don't care if it's 12 bucks, make it. A lot of people think that, oh, it's only 12 bucks, big deal. No, because it's on a score grid. It's a grid. It's a flow chart, right? It's an algorithm. If you're not making that 12-month monthly, you don't understand how much you're killing yourself. Make the minimum monthly payments.
So when traditional lenders say no, what alternative or specialty financings are actually available to buyers? So, you know, the bank's got the most amount of money. They can, at the end, maybe give you the best rate if you're an A person. But, you know, lots of times the banks, unless they have a relationship, they're getting shot down by banks.
Yeah.
And then they want X, Y, Z mortgage, like, you know, percentage. So what is their number one option that they can look for? Because what I see is they're running around to maybe 3, 4, 5 brokers. And I tell them, that's hurting your credit score. They went to 5 brokers for one trying to get the best terms or whatever.
That's awesome, Daryl. I'm glad. I would never have said that. I'm so glad you said that.
I tell them that all the time.
And here's the
We're
reason
going to
why.
recommend a couple and go there. And
if you go to 5 brokers, I don't know what the other 4 brokers are doing. I know what I do, and I know how I present my file. And listen, my number one competition is fraud. There's so much fraud out there in the mortgage industry. It's terrible. I hate it. It's the biggest reason why I joined Mortgage Professionals Canada, to clean up the industry.
Money laundering, FinTrack, that's why.
Exactly, right?
That's the biggest thing in the
fraud
world.
For shelter, fraud for rates. So this actually happened about 2 months ago. That happens all the time. I sent a deal in to a client, to a bank, and of course, the client thought they were smart. We're dealing with another broker, knock yourself out. And I do a lot of business with this bank. And so the bank called me and said, hey, we got this in from another broker. Now, they won't tell me who, and I don't want to know. It's not my business. I said, so what's up? She goes, well, we need a consent form to say that this client wants to deal with you. She says, but then like, the story is totally different. And I'm like, how could it be totally different? Like, I got it. Like, this is a story. The story was totally different because it was fraud, right? And it screwed the client. So the bank said, we're not dealing with this. Just because of reputational risk, if the client's going to lie, and it probably wasn't even, I don't think it was the client. I think it was a broker trying to be a smart ass to try and get a better rate. Right? Everything can be done. It can be done properly. When you cheat, you'll get caught. Now, they don't always get caught. I wish they got caught a lot more. But this affected the broker and the client. So I said, like, why didn't you tell me you were doing that? And like, I would have helped you. And where'd they go? Can you find out? Because the stories always have to be the same. And if you have different stories for the same client, what up? Like, what happened, right? So yeah, you know, when I interview my clients, I said, listen, when you complete my application and we pull the credit bureau on you, you're no way obligated to deal with me. There's nothing. I only want clients that deal with me who want to deal with me. That's it. That's it. That's all. So do what you got to do. I'll give you the proper advice. I'll tell you and say, and you make the decision. Thank God I'm okay. I don't win all the time, but I win enough times.
Right. So as realtors, our job is to make sure we qualify them as best we can and find out what's important. Remember, you asked his 10-year plan. So if you're a first-time home buyer, there's nothing really more exciting than buying your first condo, townhouse, whatever it may be. It's like, you know, now you're maybe leaving your parents, or you've been renting a place with a couple other people. Now you're getting engaged, you're going to get married, you're going to get your first place. It's exciting. So it's our job to find out what's important to them, where the funds are coming from to get them for their deposit before we even start. Because most realtors just jump them in the car. Oh, we're looking for 1.2 million. They haven't got them qualified. You go show them 30 or 40 houses, and they say, oh, we like one. They're going to do an offer. We make a condition on financing, and it falls flat in your face. So you need to make sure you do your preparation before you start running around. Make sure you've gone through all the qualifying questions, 100%, not 80%, not 20%, 100%. Then pass them on to Vince. Let them do the final part of getting their financing in place. He'll tell you, you know what, they're good for, you know, they told us 1.2, they're good for $1 million. So don't go be showing them properties for 1.5 million. Show them properties in that are in their price range. And they're always going to tell you, well, we can look up to 1.4 because we can go negotiate 400,000. Guys, the market is not that bad that, you know, you're $1 million, 4 million, or 5 million. There's a difference on where the prices are going to be negotiable.
And just so you know, Daryl, my mindset for every one of my realtor partners that I deal with, I want to make you look like a rock star. That's it, that's all. If Chris honors me with a client next week, my goal, number one, is to make sure the client is taken care of. Number two is to make him look like a rock star. My goal is for the client to say, Chris, man, thank you for introducing me to Vinny. He was a rock star. Now he looks good because he's the guy. He was the conduit that did it. That's my mindset, to make you guys look like rock stars. Because when I close the deals, we all make money. Client's happy, I'm happy, my wife's happy, Chris, everyone's happy. Daryl's even happier. That's my mindset. So, you know, and, you know, as a process, you know, I send a template out. You send it to your client, not me, because I need a warm lead. You CC me, hey, I partnered with Vince Agozzino, he's all the options, and I create it for you. You can just copy and paste. It's really easy. And then I take it from there. And then every step of the way, without excluding client confidentiality, I keep you posted. What's up? What's up? What's up? I have 2 guys at the office that help my back work for paperwork and admin work, so they collect documentation. You know, I'll never forget, and this does not happen, so it doesn't matter if you're in this room or not, I'll say it. I had realtors that used to call me and say, oh yeah, but here's this person, but you can't speak to the client because they're my client, only I can speak with them. So first I didn't understand. I go, what? What do you mean I can't speak to the client? Like, you're sending me the client to get their finance. How can I help them if I can't speak to them? Well, whatever you got to say to them, it comes through me. Yeah, not going to work. I said, sweetheart, you sell the home, I'll do the financing. If it doesn't work like that, there's the door. Very straight. Couldn't care less, to be honest with you, right? So, client's mine for financing. Don't get involved. It's mine. If that doesn't work for you, don't send it to me. Because I need to be sure what's happening. This is financing. This is my world. Sell that house. Sell the backyard. That's not my world. That's your world. I step back of that stuff. You step back of the finance stuff. And together,
it's called collaboration,
exactly,
guys. 100% collaboration.
We stay in our lanes. Absolutely.
Right? Because I see too often that realtors are saying, oh yeah, you can do this and do that.
Yeah.
And don't say things that you have really no point in saying, because you're only going to get yourself in trouble and get the other people in trouble. So I've always reached out to a bank, a mortgage broker, to make sure they do their end. And then I find out, I'll give them a personal call and find out, okay, what are they qualified? Because maybe that buyer is telling me, oh, I'm qualified for 1.2. I call him and say, no, they're only qualified for 900, right? So I'm going to go back to the old way. I want to see the qualifications in writing that I have it, that when we go do an offer for them.
I love that.
Because it's so important, guys, because you're going to be stronger when you're doing that offer for
You
yourself.
feel more confident.
No, but even, so if I'm going in a multiple offer situation, I show them the certificate.
Yeah, man.
Yeah, they're pre-qualified. Here's their approval.
No brainer.
Right? It's going to go a long way. So how can buyers better position themselves to get approved in a more restrictive lending environment? So pre-preparation. Like I always say, don't go buy the car or an expensive item before you're going to get a mortgage. Because some people, you know what? We're getting married, we want a new car, you know, or we want, I don't know, whatever, we want to go on a nice expensive holiday. I tell them they got to tighten in the reins.
Sorry, the question again?
How can a buyer get prepared to position themselves, you know, for all the things, you know, with their credit score, to get the most available funds that they can get for them, so it's not so restrictive, and they're fully prepared moving forward, because it might be 90 days out.
Yeah.
So it's preparation beforehand.
I'm sorry, I just feel like we're circling back.
I know, but I just want to be clear on that, because it's so important.
You gotta talk to a mortgage professional. Like, financing is key. It's everything, if you ask me, right? Because there's so many options. Like, there's purchase plus improvements. Let's say one of these ladies show a lovely house, and the house is fantastic, and the bones are great, but the kitchen is shit, and the wife doesn't like it. You know what? We can do a purchase plus improvement product where I'll give you 50 grand extra on the mortgage to fix the kitchen up.
Bingo, that's what it's looking for.
Yeah, right? Different things. Different strokes for different
we just were
folks.
doing that because there's a house with an upgraded kitchen.
Yeah.
But it's up here, it's probably $200,000 more than the market value, where everything else is down here. So you can go spend $50,000 or $60,000 in the kitchen, you're still further ahead.
Yeah, and I tell you, getting back to our first-time buyers, if they pre-qualify with me, I'll say, hey, on the A side, and I'll tell you guys too, you're approved again to 700. But if you really like something else, I can go up to 1 million, but it'll be this option. So again, we'll give them those options, not just the one.
Guys, I'll tell you what, that'll save you a lot of deals that you may not get. That's a very vital point, that you know that. Because there's so many times where something is a little dated, right? Because something's after 15, 20 years old, it's dated. And it needs refreshing up.
I mean, 50% of all, unfortunately, marriages will end in divorce. Anybody know of a spousal buyout program that's out there? We can go back up to 95%.
What's this?
Spousal buyout. So unfortunately, Tommy and Susie are getting divorced. Tommy needs to buy out Susie, or Susie needs to buy out Tommy. On the A side, we can refinance them up to 95% for the buyout. Right? And now I'm gonna finance that house plus this house. You're gonna sell 2 homes and blah blah blah, and purchase 2 and sell 1. Options, options, options. If you are not dealing with a qualified mortgage professional in this country, it's a shame.
Who knew that?
Yeah.
About the spousal buyout?
Because
I can guarantee you 95%
so
of
you
them
have
did
one
not, though.
perfect. You got one rock star back
Right?
there. I see that.
But I tell
2
you,
rock
95% of the people don't know
Yeah.
that. Because there's so often that the spouses are having great debate because they're not agreeing on anything.
You know,
and one wants to stay, but they can't afford to buy the other one out.
if we leave with nothing but this in this meeting, never think it's a no. Just say, you know, I'm not sure. Let me call someone. I'll find out. And call me. That's it. Because you don't know what we can do, the magic I can do, and I've done.
You don't know what
Right?
you don't know.
You don't know what you don't know. So
Right.
you need to keep yourself open-minded. Things are always changing, right? I have a team of 35 brokers under my broker license, and you know, some are very experienced, much like you guys are. And if they don't come to my monthly meetings, I say, what are you doing? Why aren't you coming? I go, I've been doing this for 35 years, and I come to every single meeting. Oh, I know everything. No, you don't. Because every week the policies change. I don't know everything. It's crazy. And I have 120 different lenders that I play with. I probably play with about 6 to 10 annually, because they cover all my bases, quite frankly. But when I have a product that's not 6 to 10, then I just do research. You know, I've got Farm Lending Canada. I do farms. You think I know all their policies? I'm good. I ain't that good. Right? What do? Read it, call them back. Done. I don't claim to be the guru. I just know how to get information fast.
So, construction financing, this is a big one. Construction finance can be very, very complex. What should buyers or investors know before considering this route?
Have a budget. Make sure you've done this before.
No, but I'm a first-time home investor. I haven't done it before. I see that, prices are pretty much at a bottom. There's, great opportunities out there, so many of them. And I've got a little extra money that, I can sit there and put in towards an investment. So what should I be doing on the financial things to help me get that approval that I can go buy one as a pure investment, not to live in, but as a pure investment?
I'm sorry, you don't want to build a home.
No.
Not construction financing in that
No.
aspect. Okay, I'm sorry.
Construction financing too.
So okay,
two ways.
Let's
do
say
both.
Yeah, so if you've got clients that are small builders that do infills, 5, 10 homes a year, maybe they do more. We have construction finance that will aid the financing in that request. The one thing about construction financing that I think is everyone has misconstrued is that they think the banks give the money to the construction guys first and then they go build. They don't do that. We do 75% of the construction hard costs of the budget. So what that means is, if we're talking in the private construction financing world, what that means is, Tony goes to build a home. Tony has to get that home. He has to pay for the permits, the building, architecture drawings, and get it out of the basement, the foundation. So he's put in 25% of that cost on his own accord. And we need him to do that to show that he's got skin in the game. And
I paid 1.5 million for my land, whatever.
Yeah.
And I want to build a house for roughly 2 to 2.5 somewhere.
So what we'll do what we'll do in that situation, you buy 1.5. So Tony, why am I saying Tony? It's that nice. So yeah, so Tony is going to build a home. Tony has given us drawings, certified architectural drawings. So we see the home. We send that drawing to an appraiser, and an appraiser gives us the value of the property as is, meaning as it is right now. It's worth 1.5 million. And then Tony says, well, I'm going to build this house on it.
It's going to be worth
And with this
2.5.
house on it, now the appraiser is going to say, well, as if completed, now it's worth 2.5 million. So I'm going to lend against the 2.5 million, not the 1.5. And I'm going to do 75% of the hard costs of that budget. And there's going to be a budget. Tony's giving me a budget. But Tony's going to get it out of the ground for me, put the the forms down for the basement, and then we send adjusters out. They have percentages of every type of job, what's completed, and then we send it back. Okay, 60% is complete. We'll give you 60% of the amount that you need. Boom. And they only pay interest on that 16%. Then the walls come up, the windows go in, and the roof is on. Now that's 35%. Adjuster goes out. That's it. Yeah. Just as appraiser goes out. Yeah. 35% complete. Tells me, okay, complete, good, everything's cool. I give them 35%. So the reason why they get that other money is to go to the next stage. And the reason why, the logic behind it is, well, that's not cool. Like, well, how do I do this? It's because imagine if Tony stops and leaves me at the windows. If he didn't put anything into it, what's going to stop him from
running away,
completing the house? Now I know he's got skin in the game. Because I don't want to build a house. I'm not a home builder. So really, in those situations of construction financing, I look at that client as my partner. Because I want that house closed, and I want it done in a year. Because in that instance, private construction financing could be anywhere between 9 to 10%, right? You're looking at about 3 or 4% fees, so it's expensive. But construction private financing is really quick, unlike Daryl said. It could be a pain in the ass. But privately, no, it's not. But you pay for it in interest. So I tell my builders, build this house fast, because every day you're paying interest. It's like an added cost. So finance is a cost. Just in your line of an Excel sheet, you have plumbing, heating, sprinkler, whatever, electrical, finance. So the longer it takes, the more you're paying me. And we don't want to be there a long time. We want in and out. We want to move our money all the time. So again, there are a lot of options there. And with a broker we even touched on, we did over $80 million in private deals last year in private financing. It's probably a good market of the game. That's why FSRA, the Financial Service Regulatory Authority, is really on our private world, and it needs to be, because it needs to protect Canadians, because there are too many shysters out there that are ripping people off, which is bullshit, and I hate it, right? So we do a lot of co-brokering within the province because we've got a lot of connections, and there's always a way. So I have a funny line that most people don't like it, but I'll say, listen, call me, I'll get you the money, no problem. Depends what you want to pay. I don't care what your situation is. I'll get it for you, right? Very rarely I won't. Most people don't want to pay 9%, so they don't think, well, I got it. You just don't want to pay it. That's your problem, not mine. Not problem, but that's your prerogative, right?
So what would be the biggest misconceptions people have about construction development financing? Because, you know, if I'm buying a new condo, it's pretty straightforward. I've got to still qualify. I'm buying a condo for $700 as a pure investor. What percentage will you lend me for that?
20%, 80%.
80%
down, yeah, investors, yeah.
Right?
Sorry, 20% down, 80% loan.
And that's looking like, so I'm buying it from a builder for $700,000. It's today. It's not going to be built for 4 years. So what's my concern?
What you have to be wary of, exactly your concern is exactly where you're getting to. We just came off of 2021, 2022. People, investors, shitty products out there. People are spending $850,000 on a pre-con for a terrible unit. Today they're coming to fruition, they're being delivered, and that appraisal came in at $650,000.
No, all day, they're lucky for
all
$650,000.
day. So my clients, or the client, is stuck with an extra $2,000 because the bank is only going to do 80% of $650,000, not 80% of $850,000 or $800,000. That's huge. I feel horrible. There are weekly people walking away from $100,000, $150,000.
That's where the government didn't help out enough. Because I believe they should have helped out.
So let me tell you something on this point. This is what we call market risk.
I know.
It's a risk. It's like buying stocks.
It's a gamble.
So if it wasn't a risk, everybody would do it, Daryl. No, it's a risk, man. You know what you're doing. You know what? When I used to see, God bless, taxi drivers owning 3 properties, there's something wrong. Without respect, unless he owns a fleet of 50. But what are you doing owning 3 properties? That's not your gamut.
They're financing.
But they made it so easy. They're signing on the back of the table. Well, and these poor guys didn't know what they were doing. But people were taking advantage of them.
They were.
So, no, I love you, but I'll dispute you. No, the government should not. So if we go back 10 years, when these people made $100,000, why was the government intervening and taking it back?
They can get taxed.
It's got to work both ways,
They
right?
can get taxed. They can get 50% back.
Be careful, man. It's a risk. It's called a market risk. Be careful what you're buying. What are you buying? You know, be careful of the product. They the last 5 years have been shitty product. They've been 600 square feet. The front door is is next to the kitchen. It's a disgusting product. It's because no one's going to live in it. The end user's not living in it, right? So they don't care. The walls are paper thin. It's terrible.
So I got a couple minutes here.
Sorry.
So someone looking to expand beyond residential. How does commercial financing differ from traditional home financing? What qualifications?
Yeah.
What kind of rates? What's the risk? What's their positives? Because there's lots of people saying, you know what, give me some commercial land.
So thankfully we have a commercial department as well. Imagine that at Capital 360. It's a different beast. It's a different animal. I am not the expert of commercial. My partner is. Okay.
But what can you tell us?
So I can tell you, and he made beautiful notes for me because he takes care of this world. So if you've got commercial deals and you know nothing about it, and I'll send this template to your team.
I tell you not to get involved if you don't know anything about it.
Some things you need to collect from your clients before you bring it to me is we need a personal net worth statement. So hopefully you all know what a personal net worth statement is. We need leases if it's tenanted. We need the financials for the borrowing company. We need the financials for an operating business if it's owner occupied. The tax bill of the commercial place. So we're collecting documents. Is an environmental appraisal required if available? Things like that. Banks, you're looking normally go up to about 75% loan to value with a 25-year amortization for investment properties, and up to 80% and 30% amortization for owner occupied. So CMHC again on this side, on the commercial side, can go up to 95% for like apartment buildings, affordable housing conditions, things of that nature. Rates are around about 4.5% to 5.5% for conventional mortgages and 3.5% to 4% for CMHC loans on the commercial side. Multi-res, right? 4 units or higher, 5, 6, 8 unit triplex, things like that nature. But we also have alternative lenders on the commercial side. Same thing as the resi. They also do on the alternative side. Again, B lenders will go up to 75%. Rates are about 6 to 7% because they're mitigating risk. There's typically a 1% lender fee as well that they'll have on there. 25-year AM. They will accept bank statements, stated income, so things of that nature. And also we have private lenders on the commercial side. So we have appetite for everything. Folks, the market is flush with cash. A lot of money in Canada. And a lot of people looking to get money out. I probably get about 30 emails a day from mortgage investment corporations, which are called MICs. that have money. They go, Vinny, I want to get my money out. Vinny, give my money out. Because it's just sitting in the banks, or they're on a line of credit and they have to pay it out and they can move it, right? So it's out there. But, for 2026, we're looking for a rebound. The activity is expected to be transactional, but we're looking for good things. It's a different ball game. I will send this template with respect to commercial to you so you can cascade to your team. Again, don't say no. Don't call me before you say no.
Right. So looking ahead, what strategies should buyers and investors focus on to stay competitive and successful in today's market?
Looking ahead.
Yeah, looking ahead, what strategy should a buyer or investor be focused on to stay competitive and successful in today's market?
Okay, out of 30 years of doing this in the industry, I've never seen the next 12 months as being a better time to buy a house.
That's what I say.
Simple as that, folks.
It's a 12.
I swear to you, God, it's a buyer's market. People, Mark, sorry, Mark.
Yeah.
Mark can attest this with his tenure. People have always tried to time the market. It's impossible. This 12 months is probably the best. It's 8 out of 10. I'm telling you, it's 8 out of 10. If you've got coin, buy.
Or go lend.
Yes, because in 2 or 3 years, you'll be a happy camper. You will be a happy camper. I mean, that's a strategy.
2028 is what I feel that the market will really start to turn this way.
Yeah, immigration
Right.
will come back.
2027, they're going to
just
open it
have
up
to
again.
make sure we get the right immigrants that don't put a drain on our society and actually aid us in our society. But we need workers. Like we need people to work. There are jobs that Canadians won't do. Simple as that. But we need them. We need immigrants. God bless
Well,
them.
how can you
We just
survive
need the
without it?
right kind. That's all. That don't drain us.
Right. So it's time for question and answer time.
Oh wow.
So Cyrus, to no surprise, jumping up there. Cyrus, I'm going to get you to sit there. I don't want you to come up front this time.
You're not stopping.
So in case no one knows Cyrus, he always wants to be point and center. But anyway, go ahead, Cyrus.
Hi, Cyrus.
Hi. I have one question.
Yeah, let me come here.
And the question, we know that what's happening in the current real estate market, okay? The houses are selling, but not to that high inventory. And also the government has given 13% rebate for pre-construction. And we are just talking about the first-time home buyers. What about those homeowners who are looking to refinance and they're in big debts?
Yeah, we got problems, Cyrus. So no, you're absolutely right.
So what Cyrus is saying is, someone has a house, they've been living in it for 5 years or whatever they had, because realize 35% of the mortgages are coming due in 2026. So in 5 years ago, they got very, very low rates. Houses were 20 to 25% higher. So what's happened is now houses, condos, townhouse, semis, whatever it may be, could be roughly 20 to 25% less than what they paid 5 years ago. So they could have been at 0 to 2% or 3% financing. So now they have to renew their mortgage, but they're already feeling underwater because, as we all know, everything, gas, food, heating, everything is 20 to 25% higher. It costs a lot more to survive. They're on a fixed budget. So they're coming up for financing. So he's asking Vince, what can they do to keep them above water and keep their house?
So Cyrus, if that's the question, if they're currently at a bank and their house underwater, they have no choice. They simply sign that paper and go. Simple as that. Because we can't move them because they won't qualify. Because the equity will not be what it was. So there's not many options for those people, unfortunately, because equity is equity. And one of the big things in 2016 when the feds took away the ability to refinance up to 90-95%, we're at 80% max. We're done. And in this market, being as crazy as it is, a year ago, my privates were going above 70-75. Now, in the last 6 months, they've gone back to 80 for purchases, 75% loan to value for refinances. So unfortunately, the market isn't there for them right now. So they don't have the ability to move or make a change. But it will all be dictated by the value of the home. Now, the good thing is, we thought the world was going to end when they were getting rates of 1.9, 1.8%. But, you know, we are, you know, in the G7, Mark Carney did a great thing when he was the governor of the Bank of Canada. He included a stress test, which everybody hates. But the stress test actually saved Canada. You know, we got nowhere near what happened in the States with respect to values because we foresaw that, hey, if they're getting 4%, if rates go up 2%, can they still qualify? So we always did stress tests in the lender world before this happened. We said, what happens? Because we have to forecast, what happens if this happens? And so that's what actually saved Canadians. But a lot of Canadians now, you know, my talks with them is you need to rebudget. So you can't go to Aruba twice this year. You can't go to the keg 4 times this week. You can't buy six TVs because, you know, that
You got to cut back.
everything was free. And the problem is for 4 or 5 years, people thought that was normal. Are you crazy? 1.9% is not normal. That's actually wrong. It creates the wrong environment, quite frankly. And so, but people thought this was going to be forever. No, it's not going to be forever. And here we are. 4% is the right rate, man. It's not bad. You can talk to Daryl and myself and my parents as well, you know, paying 13, 18%, right? So these people, I think times will get better as they go, but it's all about the equity in their home and what their value is. So a lot of times when I'm dealing with people, if they're in that scenario exactly like you're saying, Cypress, first thing I do is listen, it's going to cost you $600 for an appraisal. That will dictate what we can do or not. There's an investment, up to you.
So I have a question, and I would add on to this, and I think you've mentioned it, that I know, and they're not advertising it. So this is some of the things that I know and you would know, but the banks are, the bank is not in the industry of wanting to take the house back.
No.
They're doing everything in their power to help you as the consumer keep your house. They're in the business of lending money for their investors, and them can make money. But they're not in the position, they don't want to put your house power sale. So I know that, and you can answer or you don't have to answer, it's your choice. But some of the banks, if you, let's say you have a traditional financing with a bank, some of them will work with you. You need to sit down with the manager.
1,000,000%.
And they will try, so let's say you had only a 20-year amortization, maybe they'll put a 30-year amortization, maybe they'll put a 35-year, maybe they'll put a 40-year amortization. So what that means is you're paying the same amount of money, but you're not paying off any principal, you're just paying off interest. So that way you and your family can stay in the house, the bank doesn't have to come and take the house because they don't want to take your house. So you have to have a good relationship with your mortgage broker or your bank, whoever you're working with, and not going out spending money frugally and just saying, oh, the hell with it, you know, because it's not going to work. You're going to have to really tighten down and work with that financial institution, because otherwise then you're going to have to put it up for sale and try and get something smaller that's more affordable. Because I see a lot of people right now that are forced to sell, they have to downsize. I just sold the family that beautiful house. You know, they tried with some other brokers, couldn't sell it, then they were referred to us. We sold it for, you know, 99%, highest price in the street, but now they're in a smaller house and they're happy because now they just got their cost by 50%. So you got to come to realization, because 5 years ago was buying way above your head. We all want it, whether it was cars, whether houses, TVs, trips. It was just like life's a party. But today, the beach is not so beachy.
Reality.
It's kind of rocky, you know? So we have to make some readjustments in our life, right? So, you know, if someone wants to go and buy, you know, $2,000 purses, well, maybe just keep the purse you have and don't buy a new purse, right? Or suits or whatever it is, you know? You have to make some sacrifices to get your financials in order to keep your house, whatever it is, your
But
condo.
I will build a plan for those people. So here's what you got to do. That strategy, I'll do that for them. So even if I can't help them today, so you need to do this, and we'll talk in a year.
And if you know someone in trouble, guys, they need to start working on it today. Not a month, not 2 months, not 3 months.
It'll just get worse.
Because I had some clients, and these guys are up in the food chain. The house, we were listed at 3.3. We did our videos on it. We did a lot of stuff on it. And then, you know, they said they were having some tough times and they got to downsize. Okay, cool. That's normal today. Well, unfortunately, the bank came 2 days later after I spent, you know, roughly $1,000 doing all my preparation, and they locked them out of the house. So they locked all their furniture. They got to take some private things, but they've been living in a hotel for 2 months. And I think I tried to get you
Yeah.
like financing for these people. You know, they want 3.3, but everybody will only give them 2.8. They're not going to give them 100% of the financing what it may or may not sell for.
Yeah.
So unfortunately, they came to me too late that I couldn't help them. Right? It was the bank had already locked them out. So if you know somebody, you need to start talking, get them talking to that bank or the financial or mortgage broker to seeing how you can get them out of that water, right? If they're swimming with sharks, try and get them a life raft. Let's try and save them, right? Good question, Cyrus. Thank you.
Question.
Can I ask on the back of
Come on up here. Come up here, please. Tell them who you are. Introduce yourself.
Okay.
Might have to put that mic down a bit. Arpit helper.
Shavana?
The lovely Shavana.
Beautiful. Beautiful name. Beautiful name.
So I want to just pick up on the credit question. So I had, this is a client, unfortunately, they went into power sale, and I was lucky the lender let me continue the sale because I
Good
had
for
it
you.
up for sale, and then they were locked out midway through. But I have a couple more because I ran, now then I started running ads on that, which kind of makes me sad. But, so if people have the point where like they've missed 1 mortgage payment, 2 mortgage payments, I try to get them into their bank or an advisor quickly.
Fast.
And I said, if you're not doing this, they're like, well, you know, well, if the worst case is they take my house, they take my house. I'm like, but I think it's worse for you. You should try to negotiate, in my opinion, up front, because you're going to ruin your credit score. So tell me about the credit score, because then after that, I couldn't even place them in a house. I had to call friends of friends who had places for lease to get them in, because nobody wanted them because their credits were down.
Yeah.
400. But then after that, what's that credit score that they get? Once they go power sale, because then it's
It'll drop to 500, 450, which is brutal. The best you can get is 900. But
Yeah.
depends, like, the style. But, like, in the A world, we look at a beacon score of about 620 or higher.
Okay.
On some products, they want 680 or higher. Once you're under 620, you're kind of considered in the B world. Now, it's all true because banks and A banks want a higher credit score. So if that's you're referring to the Equifax Beacon score,
Yes.
that's the rate. I'll send you a table,
Yeah.
but 620 is the bare minimum on the A side, and sometimes I have to squeal and beg on a 620 Beacon score. 680, you're good. You are an A
And
client.
if they go power sale and then the bank ends up taking it, their credit score.
Oh, we'll
goes
just
up.
tank. It'll
Yeah,
tank.
but then also on top of that, see, here's what people don't realize. That, you know, I had a guy and I told him because they got split up, him and his wife, and they went into debt, and I knew the bank was going to take his house. And he said, screw it, I don't give a shit.
Yeah.
But they take your house, but if you owe X, Y, Z, if you owe them another 400,000,
Right.
they're not just going to let you walk away and say hasta la vista,
No.
right? They're going to go chase
Oh.
after you.
And if you take your house in that regard, it gets noted on the credit score.
Yes.
A bank will never entertain you again. They're going to say, well, why would I give you a mortgage if you didn't pay your last mortgage?
Right.
I'm out.
So their credit, how long does that remain in?
So normally like a
7
bank
years.
will give you 7
7
years,
years.
right?
7 years.
Yeah.
So that was my question, because
Mhm.
I have like 2 people I'm talking to right now, they're like 6 months behind. I'm like, guys, if you don't turn around and sell it. or
Is there
negotiate-
equity in the house?
There's probably about 250,000, so not much.
250,000 is
lot.
big.
That's a lot.
Trust me, guys.
No, but then deduct all those payments, and they're compounding interest on it.
So-
It's gonna
You're
be-
still gonna have, you're gonna still have equity.
So Shavana,
Yeah,
they call me,
yeah,
I do application,
yeah.
and I can see if I wrap it up into one payment, away we go.
Oh, so they can still stay.
Right now, yeah, but like every day is getting worse and worse.
I know, I'm.
Guys,
sometimes I don't even return your calls.
Do yourself a
Careful,
favor
careful.
and your clients a favor. As soon
What
as
you
you
could
hear,
do- Sorry, dear. What you could do in a case like that, folks,
Yeah.
is do they email?
Yeah.
Okay, email them, CC me, talk to this guy, he can help you. That's it, right? And then I'll take it from there.
guys, it is so good question, Shvana. It's so imperative that if you know somebody, a friend, a client, whoever, anybody, that if you know they're having issues, they need to fix it now. It's like if you got a leaky boat and you're in the middle of the ocean, you don't fix that, chances are you're going to get another leak. More water's going to get in there. The boat's going to start going down, and the sharks are going to start coming in. They'll start circling around. So you need to fix the problem as soon as you can get it fixed.
Most times they think it's a foregone conclusion, like your client right now.
Yeah.
250 is a lot of money. I don't know whether their debt is. That's not
And then
like
deduct
if there was
all
10 grand, like fine, but like they think, you know why, Savannah, is because all they know are the A banks, so they think they're effed up. They say they're
Yeah.
screwed, right?
Yeah.
The
They
bank
don't
will
know.
still work
They don't
with you
know
too, trust
anymore.
me.
But hopefully, a realtor professional does know more and says, no man, talk to this guy.
Yeah, you could stay.
No, then I will tell you, hey, they're shit out of luck, put the for sale sign on, they're done. Like, I'll tell you, I hate to say this, I do it once a week, put it up, done, you're finished. Because most have overextended themselves.
So let
There's
me go right to what Vince is saying. So the difference is if a sheriff comes in, like in this situation, so that's an automatic basically $50,000 because you got to pay the sheriff, you got to pay the bailiffs, the lawyers, and all that. So you just lost $50,000 of your equity. So they had 250, now they got 200, and it probably and it'll escalate fast. So you know, think if you sell it not so much on a power of sale, and you sell it as you selling it, it's going to show better, and you'll get more money. But if it goes power of sale, that was probably going to sell 10 or 20% less. Plus you have all the extra costs that you got with lawyers and bailiffs and sheriffs. So that equity, if they're 250, they might only be left with 100. So, you know, you can say people mostly have equity in their house. Even it could be 100,000. If you can save 100,000, I shouldn't have 100,000, then be owed 300, 400,000 in my future that they're going to garnish my wages and everything else for the next 7 years, right? So it's taking action immediately. So when you're talking to people, find out where they're at, right? If they're refinanced or not refinanced.
I think the last thing I'm going to end off with, Daryl and team, is that if nothing else, consider you're a mortgage professional, your partner. Just put your hands up in the air and say, I'm done. I'm not doing this. This is my guy. This is my gal. I hope I'm your guy. But do that. Like, let that.
My guy.
Yeah. I don't sing. I dance. I don't sing. Yeah, like partner with your mortgage broker. It'll just save you, man. You don't have to deal with the bullshit calls and the finance. That let me take care of that for you because yeah, you are my client and I will make sure that everything is fine.
So guys, I want to take this moment. I want to thank everybody that's here live. Give yourself a hand, right? I want to thank everybody that's online here today. And I want to especially thank Vince for so graciously supplying a beautiful lunch from Santino's. Joe, thank you. And that.
Thank you.
And for his knowledge and sharing, because I'll tell you what, I'm going to ask you guys later on some of the tidbits that you picked up here. So be prepared, not today, but later on I'm going to ask you what's the one great thing that you picked up here today. Because even I picked up a few things that...
And please don't say the penne pasta.
Oh, that was good. Right? But he's my guy. And I want to thank Vince for so graciously being here, giving up his time. But what he's doing is he's sharing his knowledge and his information that we can go out and give our consumer clients better knowledge and help them with their biggest investments. Because remember, your home is your largest investment for 95% of the people. So they need a professional as a realtor, and that's you guys, and they need a professional finance person to look after that money. So crucial. So with those collaborations together, you can have a lot of happy years ahead of you. So let's give a big hand.